Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Neil Wahlgren. Did I get that right? How did
That's
I do
right.
that?
10 out of 10. I like it.
Okay, good. That's one of the better ones I've done. Well, Neil, hey, thanks for being here today, man. Thanks for agreeing to be on the show. I'm excited to jump into today's conversation. Do you mind introducing yourself and letting people know a little bit about yourself?
Yeah, absolutely. So like you, I had a non-real estate past. I was a Air Force Academy grad and flew C-130s, the Hercules, the mighty Hercules. It's a kind of rough and tumble cargo plane. Flew that for the Air Force and then for the Navy for about 12 years. Ultimately ended up getting out, getting my MBA, a short stint with a renewable fuel startup, and ultimately got into the real estate, really commercial real estate investment world about 6.5 years ago when I moved up to the Bay Area in San Francisco.
Wow, those Hercules planes so cool. When I lived back home in Wales, I lived like in the rolling countryside, a lot of hills and mountains.
Yep.
Those would always come over, and as kids, I remember always stopping. And they're just like so cool to me. I just always remember watching those things.
Oh, they're fun. Yeah, you get to fly real low and a lot of airdrops, kicking, parajumpers, military equipment, cargo, anything you can imagine, we can throw inside and kick it out the back. So
yeah. Well, first and foremost, actually, thank you for your service, man. I appreciate it.
Absolutely.
Everyone in the military does for us, and there's just everyone I've met from the military is just outstanding human beings. So I have nothing but the utmost respect for you guys. With that, how old were you when you went into the military? Were you young or were you?
I joined the academy when I was 18.
Okay.
So that's, you get your undergrad for about 4 years and then graduate and get your commission as an officer, and then went into about 3 years of flight school, a bunch of different bases. And then at that point, full flying career for about another decade after that.
Wow. I'd be interested. I always think I know, but what kind of lessons do you think you took from on a high level? I'm sure there's tons and tons, but from a high level, what kind of lessons do you think you brought from that military background into what you do today?
Oh man, I'd say probably the biggest one is just perspective.
Mm.
Really, like, it's so easy to kind of get caught up in the moment. And, especially when you've, been in some truly dangerous situations, it's easy to kind of just stop, take a deep breath and go, this really isn't so bad. And like, they say the biggest thing with flying is aviate, navigate, and communicate. Right. And like, just keep that plane going or keep that plane flying. And the rest, I mean, you can stop, you can methodically kind of go through, and once you take a deep breath, you realize, hey, I got all the tools at my disposal. I've got an expert team that, I've built around me, either directly on your team or just through networking and, kind of being in your space for a while. And I mean, really the answers are out there and you'll find it and you'll get through it.
I love that. And there's you can apply that to every aspect of your life, right? Like you said,
oh, yeah.
like real estate, right? It's very applicable to real estate. Nothing is ever really as bad as it seems, right?
Never.
Sometimes,
Yeah.
You get a call and the unit you have is flooded or whatever the problem is, and you're like, oh my god, and you realize, okay, I have insurance, it can be cleaned up, everything. It just seems a lot worse. It's just like you said, perspective. I appreciate that. So when you left, you'd been in the military for a while, and you were used to that style of life or whatever. Was that a tough transition then? Almost, I don't want to say joining the real world. It wasn't that you weren't part of the real world, but you know what I mean? It's different, I'm sure, right? I haven't been in the military, so I'm not fully aware, but I seem like must have been, was it an easy transition, I'm guessing is what I'm asking.
Yeah, no, great question. I'd say, there's different fields in the military, from the pilot side. I initially transitioned over to a project manager role, and that was actually not so hard because I was typically, working with folks that had their unique specialties on my aircraft. A lot of times they were older anyways. And, really you're flying the plane, but you're also managing this crew for, much more complex mission than just keeping the plane airborne. And, when I came over, I joined this renewable fuels startup called Cool Planet. And I was working on an engineering team, getting this, demonstration device up and running that we converted basically woody feedstock into renewable gasoline. It was pretty neat. And so I had about 10 engineers, and it was neat. They really like, some of that background, you're able to kind of compensate for your age in terms of experience, and, really just listen to them, treat them like human beings, and, get everyone on the same page. And, it's pretty easy to earn the respect. And, we got the project done where it needed to be. And that was probably the toughest transition, but it really, at the end of the day, it was not so different than, stuff we were doing in the service.
Yeah. What made you go into that industry? What was your MBA in? What did you get an MBA in?
The MBA was just global studies, so kind of more general. But this one, it's always tough, especially from the flying world, to go, hey, do I want to stay being a commercial pilot? And I thought about it, but between you and me, it's kind of boring. Like just especially going from more exciting military flying to flying Oakland to Omaha every day. Don't tell my commercial pilot friends this, but I just, at the end of the day, you kind of feel like a bit of a glorified bus driver, and that wasn't what I wanted to do for the rest of my life. And so I've always been attracted to kind of upside potential. And, I like the idea of, hey, setting targets for yourself, having, potentially the rewards you can reap from real estate if you put together a bang up deal and get the right investors in, and, you're making money for them, you're making money for yourself. And, I found for me, it kind of hit the endorphins and the satisfaction that, I really kind of sought when I was a military pilot, in a way that, other career fields I don't think would have done.
So what you're saying essentially, you need some adrenaline.
You do, yeah, and just something that you got to work your creative juices, and get everyone aligned in the right way. You get it, especially in the rink there. I'm sure there was so much just activity and energy that needed to be kind of harnessed, in the choreography, and getting that being where you needed to be at the right time and the right way with the right people. That when it all comes together, it feels amazing, right?
I have no idea what you're talking about. You said choreography there. I have no idea.
Sorry.
No,
I've said too much.
That's to hear again. We're sharing a few secrets here today. No, I get it, right? And I think that's an interesting point as well. I think that's understanding yourself as well, right? Like, I think it's so important in what you do, right? Okay, so sometimes we have to take jobs because we have no other options, right? But if you have that choice and you're thinking with that outlook, right, try to find something that suits you, right? Because a job isn't for a few days, well, usually, right? It's for years and years, and you're going to be spending a lot of time. So at least find something that is, compatible with who you are as a person. Like you said, right, you have something, you need that little bit of excitement with what you do, right?
Oh, yeah.
To have something that, is it flying, military aircraft? No, but does it have a component that excites you? Absolutely, right? So,
100%.
I think it's good. I think it's good to kind of do that. Do you still fly? Oh, of interest, as you were saying that, I was wondering.
I do, yeah. Yeah, I'm in a flying club here, just outside of San Francisco, and it's fun. I'll take friends, family, even investors up sometimes, and we'll just go tool around the bay, stop in a Napa or somewhere along the coast and get a bite. And to me, it's almost equally as fun, especially when you do it just every once in a while, and it still kind of scratches that itch, if you know what I mean.
Yeah, absolutely. So then you transitioned from that job to real estate. Was that the next progression there?
Yeah, so a quick stopover in that startup, and then ultimately moved up to the Bay Area. Had the opportunity to join up. I had a family friend who had started and really had grown this investment company, and really his model was he had built, it was more of an investments and marketing company, and he had built a network of investors, and his structure was he would partner with commercial sponsors or commercial real estate brokers who had expertise in identifying good properties and putting them together, getting them under contract at a great price, and operating and running them, but lacked access to capital. So what they would do is they would partner on a JV deal by deal basis. This guy's company would raise the money from the investors and handle the ongoing investor kind of communication and all that piece, and then let the other side just strictly focus on the real estate. And it actually worked out pretty well. And the thing I liked about it was we got to very quickly see in depth a lot of different, just sub asset classes. So, for example, we had one guy we worked with was our multifamily guy, right? And they did strictly, I would say mid-level multifamily deals, 200 to 500 doors in the Atlanta, Northeast Atlanta suburbs, right? And there was, another operator who strictly did multi-tenant retail and multi-tenant office in the, largely the Texas, Dallas, Fort Worth area. Another one did, land development and entitlement in Northern California. And one of the operators we worked with was Mad Capital Partners, ran by these two guys, Dax and Andrew, and they did strictly single tenant net leased industrial. And it was neat when I got to line them all up side by side. I like the asset class, just amazingly simple, just easy to understand. And, to relate it to flying, we used to have this little acronym, and it was KISS, KISS, and it stands for Keep It Simple, Stupid. And basically like, all right, if you're trying to overthink it, just go back to the basics, keep it simple, stupid. And really that's what this asset class does. And it's, when you understand the risk component of it, really there's just a lot less operational churn. And, the asset class resonated with me, the partners resonated with me. And ultimately, about 2 years ago, I was able to join up full time with them. And now I oversee equity and capital markets for that group.
Very cool. So what is it about those? So industrial and triple. For one, maybe explain, if you don't mind, what industrial entails and what triple net entails, what triple net lease entails, right? Absolutely,
yeah. So really, it helps to get an idea, what does a tenant look like in that space? So we're typically buying single tenant properties, and usually the tenants are large manufacturing companies. So, these are typically B2B producers. They make everything from, organic baby food to, frozen pies to, we recently bought a property with a tenant that made industrial mixers and dryers. So imagine like a KitchenAid mixer on your counter, but 15 feet tall, and that's the kind of blades they made. Another tenant just recently made a high density foam end caps, and they would basically sell those to, electronic and appliance manufacturers who needed, perfectly laser cut foam end pieces for their, expensive stuff to be shipped. Really, we're talking B2B products that, really just fuel the gears of commerce, if you will. And, we like those because the tenants have been around a long time, 40, 50 years, oftentimes. They've seen highs and lows, and you're signing very long-term leases. Most of these are 15 or 20 years is the most common full triple net leases. And just, for your audience, the triple net means you as the owner have essentially zero expenses. So the tenant, based on the terms of the lease, is going to cover taxes. It's going to cover insurance. They're going to cover utilities, all maintenance, improvements. And when it's single tenant, that even goes a step further, where the tenant's paying for any roof repairs, replacements, any heating and air components, the pavement, the landscape. Literally 100% of the expenses for this investment type go on the tenant. So you as an owner have this extremely simple flow of cash coming in from the rents, that there's zero expenses to have to worry about beyond that.
Wow. Yeah, that's triple net always appeals to me because it's like you said, right? Once you have that tenant in there, and they're usually longer leases as well. And the cool thing is, correct me if I'm wrong, is usually the annual rent growth is baked into the lease usually as well, right? There's somewhat of an increase every year.
Absolutely, yeah. We do. We build our leases with 2% annual rent bumps. And really that's designed to kind of hedge against inflation. So you have that, really you are buying a very consistent, predictable flow of cash flow streams that's, getting distributed to investors from day one, 100% occupancy that's hedged against inflation through those tax bumps or through those rent bumps there.
Yeah, that's amazing. Essentially, you're handing off the property, right? You still own it, but you act as if the other person owns it, whoever that single tenant is. That's really cool. I know you're more on the capital side of stuff, but I'm sure you understand operational. When you guys go and acquire a property, do you go in acquiring just any property that looks like a good deal, or do you have the tenant in mind when you go to buy? Do you find the tenant first, perhaps? How does that marry together?
Yeah, no, great question. There's really two ways to approach this based on this asset type. You're either buying stabilized properties on the market, where you are the lease is pre-made and fixed, and you are essentially buying a piece of real estate with a tenant in place with X amount of years left on that lease term, right? So the closer it is to zero, the more risk there is, because you're going to have to go through a releasing event. You don't know if that tenant's going to release. You don't know if there's going to be, additional improvements required to get them to release. There's just more variables. So we like being on the front end of that, that way we never have to worry about that releasing event. And the way we acquire properties, the way we do it is through sale leaseback. So typically, just to paint a quick story, most of our acquisition properties come from what are called owner occupants. Mm-hmm. And that's when you have, usually a manufacturing company that was built from scratch. The owners has grown this company for 40, 50 years sometimes. They typically own their own real estate and they're looking for an exit. So what'll happen is they will often find their exit by selling the company to a small private equity firm. And that private equity group, they're buying the company because they think they have the skills required to continue to grow that company in a way that, they think they can deliver returns to their investors. What PE groups don't like doing is owning real estate because they can't get the returns they look for by owning the building. So that's their motivation. Now they come to us and they go, hey, we just bought a new portfolio company, came with the real estate. Let's do a sale leaseback. So they sell us the real estate. We give them a big infusion of cash, and then they reinvest that cash into their business operations or pay down debt, build new manufacturing lines, new headcount, whatever's best for their business. And then simultaneously, they're signing a brand new absolute triple net 20-year lease with rent bumps, which is now our securitization of those future cash flows.
Wow, yeah, it's such an interesting model. And I think for people that might be thinking, well, why don't they buy the real estate, right? They're essentially they're owners. They don't own it, but they're acting like owners. They're doing 100% of everything that needs to be done. Why is that? Is that just because they want to free up capital to do other things? And with the lease, they're only paying, they would have to put 20, 25, 30% down on a purchase.
Yeah.
Right?
There's a lot of reasons for it. The best way to kind of wrap your head around it is view it as a refinancing tool for the owners, right? Mm-hmm. So if they own the real estate outright, really they have one of two ways to pull capital from that real estate. The first is put a mortgage on it, right? But the mortgage is limited where you're only able to essentially pull about 70% of the value of that real estate out. And then your tax deduction is limited based on a number of factors on the current tax code. Conversely, with a sale leaseback, you're able to pull 100% of the value of the property out by selling it. And then all the rent that you pay, you're able to deduct 100% of those rental payments as full company expenses for, thereafter as a renter in that situation. So really it's, kind of cost benefit there. But a lot of folks, we'll look at those two options and go, hey, this is better. We can maximize returns, free up more proceeds here and make better use of this and essentially bet on their company's internal ROI for using those funds, saying, hey, that's better than the alternative here.
Yeah, that's interesting. Interesting thing is I worked for Cirque du Soleil recently, the start of 2020, MGM sold a lot of their casinos and then leased it back.
Yeah, same exact process there.
Yeah, it was interesting, which coincidentally worked out great for them because they had all this money in the bank when the pandemic hit. So yeah. I think it was blind luck because I'm sure something like that takes a year to negotiate, right? You can't just sell they did casinos in a few weeks or whatever. So I'm sure it was just pure luck, but I think it worked out for them.
Yeah.
What kind of financing are you guys using on this? How does financing work? Is it much different to multifamily?
So, multifamily gets that agency debt. So they're getting Fannie and Freddie, which is really nice from an ownership group perspective. Unfortunately for us on the industrial side, it's reserved just for multifamily there. But we typically, in today's environment, we're usually getting interest rates, maybe 50 to 100 basis points higher than, what multifamily might get. So, we've been seeing low to mid threes lately. Yeah, which is still fantastic. Yeah, we're certainly not complaining. Usually 25-year amortization, usually getting about 70% loan to value. And then the one key difference is their recourse loans. Mm. So they typically require the principals to sign personal recourse liability on that real estate debt. So really, it kind of limits, it's a little harder to, sponsor a industrial deal like that, especially if you're, kind of younger, newer to the scene and don't have, the liquidity required to, be able to qualify for a recourse loan. But, having the right partners or the right principals on the team can really, allow you to do that.
Yeah. What size deals are you guys doing out of interest?
It's grown kind of organically, but, currently, just as a snapshot, our company has been doing this in the investment model here for about 6 years. We have about 200 million assets under management, and most of the properties we're buying now, the properties are about 5 to 20 mil, and most of the equity raised for those ranges between about 2 and 5 million.
Interesting. And then, so just to try and understand the financing a little bit more, when
Sure.
they're underwriting a deal, is it really that simple? If you've got a tenant in place that really there's not much underwriting, I guess, right? You know what the cash flow is, right?
Yep.
They might look at the term of the lease, but is it a lot simpler, I guess, in that aspect?
Well, so it's important to know, where does the risk lie, right? And
Yeah.
this, anyone who tells you a deal doesn't have risk, just turn around and walk out, right? The risk is different than a multifamily, where I would say, just to compare to multifamily, background that you have there, multifamily, you're looking at, you are looking at the value of the real estate quite a bit, and you're looking at the demographics of the area quite a bit, because you want to say, hey, what are market rents? Do I think I can increase rents, increase occupancy, overall, with the goal to be increasing NOI for my property? With a single tenant deal, you are buying a set stream of cash flows that is securitized by the lease, and that lease is securitized by the credit of the tenant. So it all boils down, the risk is, how creditworthy is that tenant? And if they're just barely scraping by, breaking even, with only, $1 million or $2 million of sales a year, that's a really risky tenant, which would probably not be a great, tenant to buy, or, it better be heavily discounted in that scenario. What we do is we actually have a full credit analysis team on staff, just because that piece is so important. And we're buying what's called sub-investment grade, but it's on the high end of it. So investment grade is usually any company that does about 100 mil or more a year, and they will have outside credit agencies. At most publicly traded companies, you'll see like, hey, this is a, BBB minus, credit score, say on Wahlgreens or Rite Aid or something like that. What we do is slightly smaller. Most of our companies have between like 60 and $80 million a year in revenue, but they don't have an outside credit agency. So we actually produce that credit report and credit analysis in-house. And because of that, we take that arbitrage between what we think is real versus perceived risk, and that spread in there is value that we're able to capture. And really, that's our form of how we turn these into a value add. And historically, we've sold about 12 projects, full cycle, and we've been able to deliver, on average, about 19% to our investors. So it's been a good model, and we are able to create that value that we think, from day one, and you see that through the full cycle results there.
Yeah, that was going to be my next question. In terms of returns, I would have thought and assumed that the returns would have been lower because of that.
Yeah.
Essentially there is less risk, right? If you have more expenses, that really reduces your risk. It's very predictable what your cash flow is going to be, right? And especially with that, when you guys are checking that credit, and you know that they're really have good credit, you know the type of tenant that you're putting in there. I would have thought there would have been lower returns, but it seems like that might not be the case.
So,
right?
Yeah, I mean, most people's experience with single tenant, triple net are like, a Wahlgreens and a major metro, right? And, and don't get me wrong, that's a great triple net, you're going to have very steady flow of cash flow, but the risk is ultra low on that, right? Because everyone knows, Wahlgreens probably is not going anywhere, especially if it's in a major city. And so because the risk is low, your yield is going to be low as well. So your cap rates on those are going to trade on the low end, and you're just not going to generate a lot of cash flow. For us, we play in that, like I said, sub-investment grade, which gives us a little more arbitrage to work in and try to capture that, kind of unseen value. And so, the way we structure ours, typically cash flow from day one is about 8 to 9% annualized. And that actually, we pay out monthly, and that goes up every year with those annual rent bumps. And then when we sell, we do, kind of similar to most investment groups, where we return capital and then do a profit split at the end. And that all in, kind of results in high teens returns historically.
Yeah, very good. That's a very good return. I say, what kind of hold period do you guys? Does it vary on the project? Do you have?
It varies a little bit, and a lot of it comes down to debt. But ultimately, some deals would come in, and we think we're just really getting a great deal on the real estate. And if that's the case, if we think we're buying the real estate at a significant discount to market, those we might only hold maybe 2 to 3 years. If we think, hey, it's we're probably buying right about market, but the tenant is solid, those will be a little longer. Usually 4 to 6 years, 4 to 7 years, because they are. You're just building that value kind of slower with a really well securitized tenant. And then the last bit, sometimes you get CMBS debt, which is usually lower percentage, but it's less flexible debt. So you're more inclined to hold that closer to 10 years. And every once in a while, we'll do just a long-term hold deal like that, where, fundamentals are solid. We're looking for cash flow and just looking for a long-term hold for those that are, prefer that kind of investment.
Mm. So, but you're mostly on the investor relations fronts, right? Would that be correct?
That's correct. Yeah.
So how I'm sure that's a skill you've learned, right? You probably didn't go in knowing how to raise. Maybe you did, but what are some things you've learned in terms of raising capital, and how do you go about it?
Oh, great question. I had a buddy just getting into it, and he was single, and I'm like, dude, just treat it like you walk in a bar, right? And it's always a little uncomfortable, but you see someone that you want to talk to, and it's just kind of getting that little fire under your butt to go, all right, I got to just leave my comfort zone a little bit and just start talking to someone. And really, once you start that conversation, almost always, you got lots to talk about. It's a trust building process. You want to hear about them and learn about, hey, I want to hear where you're coming from. And chances are, especially if you do something kind of unique, they want to hear about what you do. And it may or may not be the right fit, but what we found, kind of getting that fire under your butt, and then also really just doing what you say you're going to do. And what I mean by that is, you don't need to win every project, but if you say you're going to communicate, do it religiously. And even if the data's not in, communicate anyways, and just give an update. And just 100%, if you say you're going to basically circle back with someone at a certain point in time, do that. Because I find 100% the biggest complaint investors in this space that we're in have is they go, these guys are flaky. They say they're going to do something. I put money in a deal and it goes silent, and I go, what's going on? The deal has issues, and that's even okay. Like, I get it. Deals have problems. Real world happens, but you need to be on top of it, and you need to treat your folks like they're part of that deal and not just bottom of the totem pole for getting news updates. So I think as long as you treat them with the respect that really, they are the ones making your project happen, 100%, the rest kind of takes care of itself. And, they'll bring their friends, family, colleagues in and really want other people to share that experience they've had.
Yeah. And is that where you guys are at this point? You guys have built such a good reputation for you guys. There's a lot of referrals more than.
Honestly, between you and me, we've grown about 600% in the last year, and almost exclusively through referrals. So, it's doing what you say you're going to do. And, we've been fortunate enough to have a track record where we've gone full cycle on a lot of deals too. That's usually kind of a big, hindrance for new operators to say, hey, I think I'm going to hit these projections, but really you don't know until you know, right? And, until you get to that point where you start exiting deals. But once you do, if you hit your projections or, have a good story for, why there was a deviation, then I think people really kind of increase their trust in you and your group, and, are more apt to reinvest quickly.
Yeah, I think that's great advice. It's just being a good person in that space.
Yeah, right.
Essentially, right? That's kind of what it is. Yeah, very cool, man. Very cool. Well, I appreciate you sharing your story. What a cool story, right? Going from flying, military planes to then, going to a startup venture company, right? Being part of that, and now involved in this company. It's a pretty fun ride.
It's been a very fun ride. Absolutely.
Yeah, very cool. Well, I appreciate you sharing all that, man. And that's great advice in terms of how to deal with investors. I think everyone who's interested in raising capital can learn something from that. But as this show is called Wrestling with Real Estate, I like to incorporate some wrestling related real estate questions. And the first question is, what would your wrestling name be if you picked one?
All right, we talked about this.
Yeah.
So my pull on this is name of my first pet, and then the street I grew up on. So I've heard this is how you choose creative names. So mine would be Spud Pocono. So tell me what you think about that.
The way it was a porn star name, right? It was like, this is like, mine was Ben Church.
Ben Church, I like it.
Yeah. What was yours again?
Spud Pocono. So the thing is, though, you need that good entry music, right? So yeah. What do you think I should play when they're like, "No, coming, Spud Pocono"?
There's two ways I think you can go that. I think you can be like the over the top, like ladies man, like trying to sexy man. It could be like that seductive music. I can see that, or it can be like some heavy rock music where you're just like a hardcore guy who just wants to fight everyone.
It's just ready to go, huh?
Yeah, it could be either way. I think either way is good. Either way can work, I'm sure.
I like it.
So every wrestler has a special move. What is your special move in real estate?
Oh, that's a great question. All right, special move. I would say doing something different than the rest. And I mean, really, it doesn't even have to be something specific, but I mean, let's equate it to wrestling, right? I mean, doing something unexpected, you go to the top turnbuckle, and instead of suplexing, maybe you do a tag team, double slam, or I don't know what it is, but really that the unexpected. And, I think that's something we do. I mean, really, I've never met in the 6 years I've done this, I've never met an operator who does private investments like we do in the industrial space, single tenant, who specialize on sale leasebacks. They just don't exist. And I think, finding that niche that no one else is doing and just staying in your lane, four corners, we keep that as an internal motto in our company. Every once in a while, someone will see something shiny, a little distraction, and everyone else will be like, four corners, man. Just stay where we know, stay where we're good at. This is niche, and niche is rich, and that's what they say. And honestly, it keeping that focus is what you need. So that's the special wrestling move there.
I like that. It's kind of like blue water strategy, right? You don't want to be in the red water where all the sharks are feasting on the meat.
Yep.
The blue water where
100%.
Yeah, cool. What's been the biggest body slam you've taken?
Oh man. Yeah, I mean, they come. So I would say the biggest one of late was probably, we did this deal in, we were raising money in early March, which, as we all know, was when our good friend, Mr. COVID, showed up. And we were, I think, probably 95% verbally committed. And typically with our investor group, I mean, we probably had about a 90% conversion from verbal commits to people who actually funded. A very, very high kind of conversion rate there. And we just, COVID hit, and all of a sudden, there was just so much turmoil in there, and people were backing out. And I get it, and they're like, hey, I need cash on hand. I need dry powder was kind of a common theme we got. And we had to in the middle of this raise with about 2 weeks left to close, the bank was getting skittish, and, even the seller was starting to, kind of relook at terms. And we knew we had a good deal here. And so we ended up going, hey, how do we increase the perceived security of this deal in a way that will allow all parties to close? And, we all got together, and, we really were like, I don't know what we can do. And, because we were calling the investors, it was the same. And I mean, we were just gotten crushed by this body slam, and we turned around and we were actually able to creatively get the seller to sign a personal guarantee on the lease on top of the corporate. And, originally it was something totally off the table, but with COVID, he was like, look, I believe in this company, and yeah, I'll put my own personal net worth on the table here. And he signed, and that was enough to get everyone back on board. And, we closed, I think we funded about, 36 hours before we needed the money. And it was like right down to the wire, but we did. And, and the investment's been great. And even the tenant company is expanding, and they're building a new production facility down in Florida, I think early this year, in a few months. And so, yeah, it just ended up being a great move overall.
Very good, very good. Yeah, you seem like you reversed that body slam. You body slammed.
Exactly, right?
So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Oh, man. I would say early in my career raising money. I used to go to kind of career network events, and I realized, I would go and, we talked a little bit about kind of the cold approach, and, it works and it doesn't. And what I found, and maybe this isn't a good story because it's not me still taking that jump. It's me reevaluating that jump and going, how do I do this in a way that fits my personality better? And so, I realized I was like, I'm having trouble conveying, the message of my company and these big kind of crowded, commercial networking. Imagine pre-COVID, there's booths, it's a trade fair type of environment. And I realized at that point, this is not a specialty that aligns with my kind of personality and my strengths. And, really, I've always thrived in a team environment. And so what I did actually was, eventually did a pivot to how I approach new folks. And I did it through folks that I already knew and really pushed hard and said, hey, introduce me to people that you think would really, derive value from this investment model. And I found it was amazing. I'm just by asking, suddenly, people were inviting, full, wings of their company over for luncheons. And, it really, people came out of the woodwork in terms of being excited to bring folks over who wanted to hear the message. And, kind of seeing that, hey, this is not working so well for me and in general, and this new approach, potentially being a lot better, and testing it and trying it. And that was, it probably took that fear on the top rope to go, hey, do I take this jump? Do I pivot to something that's more effective? And, ultimately the latter was the best answer there.
Man, great story. I like that. I like that a lot. Well, hey, this has been very informative, very cool interview. Really enjoyed this interview, man.
Likewise.
Before we go, if people want to reach out to you and get in touch with you, maybe find out more about what you guys are doing out there, how can they find you?
Yeah, great question. I'm super accessible. You can shoot me an email, Neil, Neil, like Neil Diamond, easy to remember. Neil at magcp for magcapitalpartners.com. Or you can just go to our website, magcp, or excuse me, magcp.com. There's a easy contact avenue there, but we pride ourselves on being super accessible. So usually try to get back within a few hours, if not right away. So look forward to connecting with anyone interested in the investment type that we're doing. And again, thank you so much for having me on the show.
Absolutely, man. And one last question is,
yeah,
if anyone wants to do anything for you, provide any value for you, help you guys out in any way whatsoever, how could they do so? What could you use? What could you help with?
I would say, it's super cliche, but you are the value of your network. And one of the things that brings me personal, so not financial or professional success, but brings me just personal satisfaction, is when someone comes to me and goes, hey, I'm having this problem, and knowing the exact perfect person to pair them with. And, often I'm hands off after that. And I'm like, I'll let you two just go to town, and, and getting that thank you note 2 weeks later and going, that thank you so much for the recommendation. So, really anyone who thinks, based on what I've talked about, thinks that they might be able to, connect or ask a question, hey, do you know someone in this space, or that you can introduce me to? I absolutely love doing that. And, would be happy to do that any way I can.
Perfect. Well, Neil, thank you so much, man, for making the time. Really enjoyed this conversation. Have an awesome rest of your day.
Thank you so much as well, Barry. Take care.